A significant new banking regulation has officially been approved and will go into effect this week. Here's what's troubling me about it. For countless Americans, this new rule could impact how you access your accounts, what kind of fees you might be charged, and whether your transactions get flagged or even frozen unexpectedly. Most people won't find out about this until something actually goes wrong. Until they're standing at an ATM that refuses to dispense cash or trying to make a payment that gets rejected for reasons they can't understand. But you're hearing about it now, which means you have time to get ready to safeguard your funds and to ensure everything is in order before this rule takes effect nationwide. Before we go any further, if you want to stay informed about banking regulations and financial policies that could impact your money, hit that subscribe button and turn on notifications. We regularly break down financial news like this, the kind that genuinely affects your accounts and your day-to-day life. Keeping up with these changes could save you hundreds or even thousands in penalties and restricted funds. All right, let's dive in. So, here's what's happening. This regulation comes from the Financial Crimes Enforcement Network, commonly referred to as FINS, which is part of the U.S. Treasury Department. They've just put the finishing touches on what's called the Customer Due Diligence Rule Update, also known as the Beneficial Ownership Information Rule. Let me explain that in plain language. Starting very soon, banks are now required to gather and verify far more detailed information regarding who owns and controls business accounts. And under certain circumstances, they're applying these stricter verification standards to personal accounts as well. The official justification for this is to combat moneying, fraud, and terrorist financing. Those are legitimate concerns that do need to be addressed. But here's where it gets tricky. The way banks are implementing this rule is casting a much wider net than most people anticipate. And that net is ensnaring honest customers who haven't done anything wrong, but who now have to supply extra paperwork, navigate additional hurdles, and potentially face frozen accounts if something doesn't align with the bank's new requirements. Let me share the story of a man named Michael. He's 54 years old, owns a small landscaping company, and has banked with the same institution for 18 years. A couple weeks ago, Michael went to deposit a check from one of his regular commercial clients for $6,000. It was the same kind of deposit he'd made countless times before. This time, however, the teller informed him the funds would need to be placed on hold for a compliance review. Michael asked what that entailed. The teller couldn't really clarify, just mentioned something about new verification procedures. 3 days went by. Michael still couldn't access that money. He spent 45 minutes on hold with customer service before someone finally told him his account had been flagged under new federal requirements. They needed him to provide updated identification, proof that he owned his business, and documentation showing where the deposit originated. Meanwhile, he had payroll coming up, equipment payments due, and no way to reach the money sitting in his account. I'll circle back to Michael's situation shortly because what happened next illustrates exactly why everyone with a bank account needs to pay attention to these changes. Here's some background on why this is occurring. Over the past several years, regulators have faced mounting pressure to intensify efforts against financial crimes following high-profile cases involving money laundering, cryptocurrency fraud, and shady business operations. So, they responded by making the rules more stringent. The problem is that when you tighten verification requirements and expand monitoring systems, you also increase the likelihood of false positives, of legitimate transactions being incorrectly flagged, and of ordinary people getting caught up in compliance reviews that can freeze their money for days or even weeks. And here's what truly concerns consumer advocates about this rule. Once your account gets flagged, even if it turns out to be an error, even if you've done absolutely nothing wrong, that flag becomes part of your banking history. One flag might not cause significant problems, but multiple flags, even if they're all innocent, can lead to your account being labeled as high risk. And once that designation is applied, banks may decide to close your account, refuse to let you open new ones, or report you to shared databases that other financial institutions check before approving applications. Getting cleared from those systems can take months or even years. Now, let's walk through the specific changes that are being implemented and how they might affect you personally. I'm breaking this down into 5 key areas. 5 changes you need to understand before this rule fully takes effect. Pay attention even if you think none of this applies to you, because there are scenarios where even a basic checking account holder could get caught up in this. The first change, and this one is receiving the most attention, involves enhanced verification for account ownership and control. Under this rule, banks must verify the identity of anyone who owns 25% or more of a business account or who has significant control over how that account is used. Now, you might think you don't have a business account, so this doesn't apply to you. For many people, that's correct. But here's where it gets more complex. If you're a freelancer, depositing income into your personal account, if you have any kind of side gig, if you receive payments through Venmo or PayPal that transfer to your bank, if you're part of a small partnership or LLC, or if your account regularly receives deposits from business sources, your bank might now request additional documentation from you. This could include your social security number, which they likely already have, but also copies of your ID, proof of your address, tax identification numbers if you have a business entity, and in some cases, written explanations of where your income comes from. Here's the aspect that catches people off guard. If you don't provide this documentation when they ask, or if there's any discrepancy between what you submit and what the bank already has in their system, they can freeze your account while they sort it out. That means no withdrawals, no transfers, no access to your money until everything is resolved. For anyone living paycheck to paycheck or with bills about to come due, that can quickly become a serious problem. Let me tell you about Sandra. She's 38, works as a graphic designer, and does freelance projects on the side with payments going into her personal checking account. Last month, she received a letter from her bank requesting updated documents to meet new federal requirements. Sandra glanced at it, thought it seemed like typical banking, and set it aside. 2 weeks later, she tried to pay a bill online. It was declined, tried to withdraw cash. Card was rejected. Her account had been restricted because she didn't respond within the 30-day window. It took Sandra 4 days to gather the paperwork, upload everything, and wait for the compliance team to review it. During those 4 days, her auto pay rent bounced. Her phone payment failed. She ended up with over $200 in overdraft and late fees, all because she didn't realize that letter actually mattered. The second change involves stricter monitoring of your deposit patterns and transaction activity. Banks have always kept an eye out for suspicious behavior. That's nothing new. What's different now is how aggressively they're required to flag activity that looks unusual for your specific account. Here's an example to illustrate this. Let's say you normally receive a direct deposit of $2,000 from your employer every 2 weeks. Your account has been steady and predictable for years. Then 1 month you sell a car for $8,000 and deposit the cash, or you receive a bonus of $5,000, or a family member sends you $3,000 to help with an unexpected expense. Under the previous system, those probably wouldn't have raised any red flags. Under the new system, any significant deviation from your normal pattern can trigger an automatic review. The deposit might be held for several days while the bank investigates. They might call asking questions about where the money came from. They might require you to prove the funds are legitimate before releasing them. If you can provide that proof quickly, the hold usually clears within a few business days. But if you're traveling, don't have easy access to your documents, or just don't respond fast enough, that hold can stretch out much longer, and while you wait, that money is sitting in your account but completely inaccessible. Type in there in the comments if you've ever had a legitimate deposit held up by your bank. It's more common than people realize, and under these new rules, it's going to happen to a lot more people. The third change places additional scrutiny on international transfers. If you send or receive money across borders, Be prepared for more questions from your bank. They now have to collect detailed information about why you're sending the money, what your relationship is with the recipient, and verify the transfer doesn't violate any sanctions. A wire transfer that used to clear in a day or two might now take 3 to 5 days or longer, and if your explanations don't satisfy their compliance team, they can simply refuse to process it. For people who regularly send money to family in other countries or business owners who pay contractors overseas, this creates delays and complications that weren't there before. The fourth change impacts your account balance directly through new fees. When your bank requests updated information, you usually get 30 days to submit it. If you meet that deadline, everything's fine. But if you miss it, some banks are now charging monthly fees between $25 and $75 until you provide what they need. Think about what happens if you don't check your mail regularly or an important email goes to spam. 3 months of my notices could mean $220 taken from your account for paperwork you never knew anyone was waiting for. Remember Sandra? Those overdraft fees she dealt with came on top of a $50 monthly compliance fee that had already been deducted. The fifth change affects how quickly you can use new accounts or make large transactions. Under this rule, banks are taking longer to fully activate new accounts. In the past, you could often open an account and start using it right away. Now, many banks are requiring waiting periods of 3 to 7 business days while they complete their verification checks. During that waiting period, your account might have limited features. You might be able to put money in, but not take it out. Your daily limits might be much lower than normal until verification finishes. The same applies if you're an existing customer trying to make a large transaction that doesn't fit your usual pattern. Maybe you're buying a car and need to wire $20,000. Maybe you're putting down a deposit on a house and need to transfer $50,000. The bank might place a temporary hold while they confirm it's actually you making a legitimate transaction. These holds usually get resolved within a few business days if you have your documentation ready, but if you're not expecting it, they can absolutely derail a time-sensitive purchase or payment. Now let me finish Michael's story. After 5 days of back and forth with his bank, he finally got his account unfrozen. But during those 5 days, he missed payroll for his 3 employees. One of them, a younger guy who depends on every paycheck, had his rent bounce as a result. Michael felt terrible about it. He ended up paying his crew in cash from his personal funds just to cover them, then waited 2 more days to get reimbursed once his business account was accessible again. The total damage from that one flag deposit was around $400 in fees, penalties, and emergency cash moves, plus all the stress, the hours spent on hold, and the strain it put on his relationships with his workers, all because the bank system decided a routine business deposit looked suspicious. But here's the other side of that story. Michael has a friend named Dennis who runs a similar business, similar size, similar banking habits. When Dennis heard about these new rules coming, he didn't wait. He called his bank right away, made sure all his contact information was up to date, submitted documentation proving his business ownership, and even gave them a heads up that a large client payment was on the way. When that payment hit his account, nothing happened. No flag, no hold, no freeze. Dennis's proactive phone call took maybe 30 minutes. Michael's reactive scramble cost him a week and hundreds of dollars. Same bank, same new requirements, completely different outcomes. The only thing that separated them was preparation. So, let's talk about what you should do right now to protect yourself. First, log into your online banking and make sure all your information is accurate. Check your address, phone number, and email. If anything's outdated, fix it today. Banks send important notices through these channels, and if they're using old information, you won't get the message until your account is already restricted. Second, if you have any business income flowing into a personal account, get ahead of this. Call your bank and ask what documentation they need to comply with the new rules. Don't wait for them to reach out first. Keep digital and physical copies of your ID, proof of address, and anything that explains your income sources. Third, if you receive deposits from multiple sources, start keeping better records. Receipts from things you've sold, copies of invoices, records of money family members have sent you. If your bank ever questions a deposit, having documentation ready can resolve the issue in hours instead of weeks. Fourth, let your bank know before you make any large or unusual deposits or withdrawals. It might feel unnecessary, but a quick heads up can significantly reduce the chances of your transaction getting flagged. A simple message saying you're depositing a check from selling your car can prevent days of problems. Fifth, turn on account alerts if you haven't already. Set up notifications for deposits, large withdrawals, declined transactions, and low balances. That way, you'll know immediately if something unexpected happens instead of finding out days later when you actually need the money. Sixth, consider having accounts at more than one bank. If your primary account gets frozen, having funds accessible somewhere else keeps you from being completely stuck while you sort things out. Hit subscribe if this is helping you understand what's changing and how to protect yourself. We cover banking updates and money rules that affect regular people. And staying informed is one of the best ways to avoid expensive surprises. Now, I need to warn you about something important. Whenever new rules create confusion, scammers take advantage. They know people are worried, and they use that to trick people into handing over sensitive information or money. So, let me be very clear about what your bank will never do. They will never call you out of the blue and ask for your full account number, your PIN, your password, or your social security number. They already have that information. They will never threaten to shut down your account unless you act immediately. Real compliance requests come with reasonable deadlines. They will never ask you to transfer money to a safe account or verification account. That's always a scam. And they will never text or email you a link asking you to click through and enter your personal details. If you get any communication like this, hang up or delete it, then contact your bank directly using the number on the back of your card or their official website. That's the only way to know you're actually talking to your bank. Now, let's say you do everything right and your account still gets flagged. What then? First, don't panic. Getting upset with a customer service rep won't help. They're not the ones who flagged you. Ask clear questions. What triggered the flag? What documentation do you need from me? How long will this take to resolve? Write down names, reference numbers, and timelines. Second, send whatever they're asking for as fast as you can. The quicker you respond, the quicker they can clear the hold. Third, if normal customer service isn't getting you anywhere, escalate. Ask for a supervisor. Ask to speak with compliance directly. File a formal complaint if necessary. You can also contact the Consumer Financial Protection Bureau if the situation isn't being handled properly. Fourth, if you're locked out and need money for essentials like groceries, rent, or medication, tell them that explicitly. Many banks have procedures for releasing partial funds in hardship situations while investigations continue. I understand some people feel this is government overreach, an invasion of financial privacy. That frustration is valid, but here's the reality. Financial crimes exist. Fraud exists. Regulators are under pressure to address those problems, and banks have to follow federal rules whether we like them or not. Getting angry at your local branch won't change the regulations. Focus on what you can control, which is being ready. Remember the difference between Michael and Dennis. Same situation, opposite outcomes. Michael lost a week and hundreds of dollars. Dennis spent 30 minutes preparing and had zero problems. The main point here is straightforward but serious. This rule is real. It's happening now, and it will affect how banks monitor your account and how fast they can restrict your access to your own money. This isn't about creating fear. It's about making sure you have the information you need. Update your contact information today. Go through your recent transactions. Be ready for extra questions about anything unusual. Keep records, turn on alerts, know how to reach your bank's compliance team, and watch out for scammers trying to exploit the confusion around these changes. These automated systems make mistakes all the time. Getting flagged doesn't mean you did anything wrong. It just means you need to be ready to show your transactions are legitimate and work through the process until it's cleared up. If this helped you understand what's happening and how to stay protected, subscribe so you don't miss future updates. Banking rules keep evolving, and most people don't learn about changes until they're already dealing with the fallout. Subscribing keeps you ahead of things that could affect your money. Leave a comment and let me know if you've dealt with any account issues recently. Have you gotten verification notices? Had transactions held up? I read the comments, and your experiences help guide what topics we cover next. If this information was useful, share it with your friends and family. Anyone with a bank account should know about these changes. It's not just about avoiding fees or frozen funds. It's about understanding how the system works so you can protect yourself. Thanks for watching.